Hello. I'll start now. Yeah. Okay. Yeah. Hello. Good evening to everybody. Today, I will start the topic on the 26 AS, the new 26 AS introduced by the government. A person who is required to file the income tax returns, first thing he has to download the 26 AS from the website by logging into by username and ID. Username will be the income tax PAN number and then user ID. Password. 26 AS is an information to of the various taxes paid by the assessee, number one, and other taxes paid in the form of TDS and TCS, tax collection at source, advance tax, etc. So this form 26 AS is elaborately changed in this year from 1st June 2020 relating to the assessment year 2021. The Income Tax Department uploads this information within 3 months from the date of filing the quarterly returns by the tax deductor, tax collector, and also advance tax paid by the assessee or the taxpayer. Without this 26 AS reference while filing the income tax returns, the details which is contained in the form 26 AS is required to be entered in the TDS column, TCS column, tax paid, advance tax, etc. Without that, income tax cannot be filed at all, income tax returns. A lot of changes have been made by the government in order to bring the transparency of the transactions of the taxpayer, which will be helpful for the government to bring the transactions into the net. So changes have been made. What are all the contents? How to use all those information from the taxpayer. So that is the importance of 26 AS. It is just a mirror of the tax paid by the taxpayer and other taxes. The government has introduced a new 26 AS form from the 1st June onwards. Rather, a lot of changes have been made by the government. It is effective from 1st June and contain information regarding tax refunds and any demands against the name of the taxpayer. If any refund has been made in the previous year, shows with interest, everything is required to be disclosed in the ITR before filing for the next financial year. Notified by the government on May 28th, effective from 1st June 2020. The government introduced Section 280-85B in the Income Tax Act 1961 via Finance Act of 2020. All changes will take place only in the Finance Act. So, whatever the proposed provisions have been made in the Finance Act 2020, notification has been issued under Rule 114I, notification for making changes in 26 years. So the new form of 26 AS already appearing now, and it is a tool in the hands of the tax authorities, which may be important from the point of view bringing in all the transactions into the net of the taxpayer. If at all, if a taxpayer misses any information which is contained in the TDS or 26 AS, the authorities will plug the loopholes of tax evasion, tax avoidance, etc. by making use of the 26 AS. So that is the purpose of the government to introduce changes in 26 AS. A very, very important document that is required to be downloaded by all the taxpayer before filing income tax returns by all the taxpayers. So that is the new 26 AS. Now let us look into the details one by one regarding what are all changes, what is its use. In order to understand 26 AS, a taxpayer is required to understand what are all the transactions he has made, where the tax has been deducted, whether he is required to pay the tax, etc. All information is required to have. What are the contents of the new 26 AS? Two parts. The 26 AS has two parts, Part A and Part B. Part A contains the basic information of the taxpayer: permanent account number, Aadhaar number, name, date of birth, ID. Before these changes, date of birth was not at all disclosed in 26 AS. And the mobile number, email address, all these things are new change. I will tell you, before 1st June, when a 26 AS was not incorporated these things. Now, 26 AS, new 26 AS will also disclose all these details, personal details. Earlier only PAN number, name of the taxpayer and the address was there only. Now, in addition to all those things, Aadhaar number, date of birth, mobile number, email address, and everything is there. Earlier only permanent account number, name and address was only there in the earlier. So this is a change in the new 26 AS as compared to earlier 26 AS. So lot of fields are there in the 26 AS: mobile number, email address, etc. All these things are captured from the income tax portal, where the taxpayer has already linked the Aadhaar with the income tax department. Importance of mobile number is very important. Email is very important. So now even for e-verification, Aadhaar verification with the mobile number is very, very important. And one point I want to tell you, by this linking the email and Aadhaar number and mobile number, a person frequently, if uses so many mobiles, it avoids duplication, it avoids everything. So even the mobile details also can be captured in case if income tax requires some information about all transactions, etc. So this is why it is required nowadays. When an assessment is made, a lot of information is required to be physically submitted by the taxpayer. By this, the income tax department itself can obtain the information about the taxpayer, about the transactions and other details. Part B contains, these are all new things. Information relating to tax deducted are collected at source. Section 192 to 195, then 206C of the Income Tax Act 1961 with regard to tax collection at source, especially from 1st October last year. The tax collection at source TCS is applicable for all the sale of goods from anybody who sells the goods. It has to be collected at a tax. Information relating to specified financial transactions. All the financial transactions, investments in mutual funds, property purchase, etc. will come under that. Then relating to the payment of taxes in advance. All the taxpayers are required to pay the advances advance tax during the financial year. As and when that advance tax is paid, it will be reflected in the 26 EAS also. Then other pending proceedings. Earlier, this was not there in the 26 EAS. If at all, if any cases are pending before the department, before the appellate tribunal, etc., details of the pending proceedings are also can be seen in the new 26 EAS. Then, if the assessment is completed, proceedings are completed, those details also will be entered by the government in department in 26 EAS. Or any other information which is very much essential from the point of view of the department, that also can be seen in 26 EAS. So information point numbers 1, 3, and 4 continue to be the same. Earlier it was there 1, 3, and 4 deducted, then payment of taxes and demand and all those things. Now all these things are additional information that is contained in the new 26 EAS. You will have to verify. A taxpayer is required to verify 26 EAS. It is just, I am using the word passbook of all the bank transactions, payment of taxes, tax. It is a mirror, I have already told you. So, in order to prepare the income tax returns, a person must go through 26 EAS and get the details in order to fill up the income tax returns form. If there is one point I want to tell you, once the income tax returns are filed, and if it does not match with the 26 EAS information, the government income tax department will issue a notice stating that there is a defective return and the income tax return shows mismatch between 26 EAS and the tax details declared by the taxpayer. Even a small error in the numbers, TAN numbers, etc., PAN numbers, it will show a mismatch. Assessment will not be completed, and hence it is very much essential for the taxpayer to go through the 26 EAS and fill up each and every information contained in 26 EAS while filling the income tax returns. So, what will happen if a taxpayer by chance escapes, or sometimes he may make mistakes, errors, etc., the mismatch will be notified by the income tax department. So, there will be an inquiry if there is an error. So, in order to avoid all those things, all the information should contain in income tax returns before it is filed. Most of the time, I'll tell you, if all the 26 EAS is taken care of income tax returns, in case of an individual's question of assessment does not arise, straight away the income tax authorities will complete the assessment. You know, now there is a faceless assessment. Faceless assessment is very important. Without calling the taxpayer to the government department, the department can complete the assessment in a transparent way when a taxpayer fill up all the details without any mistakes. So this is the importance of 26 EAS so far as is concerned. Suppose if there is a mistake in the PAN number, even one digit E means F. By mistake, if it is, it will again show a mismatch, and then it is very much essential that the correct information is required to be disclosed in ITR, whatever it is there in 26 EAS. Rule 114A of the rules read with section 285B of the income tax casts an obligation on different categories of persons to report certain financial transactions. There are a lot of financial transactions that is required to be reported also. For example, investments in a mutual fund, buying or selling the property, all those details are contained in 26 EAS. There is no question of any benami transactions which is not going to be disclosed in the new form 26 EAS. So, financial transactions are disclosed in 26 AS, and that is required to be incorporated in income tax returns also. So this report furnished by different categories of persons mentioned in the rule. A statement of financial transaction carried out by a person during the particular year will be collected. It is just mapping the information submitted by the various authorities. Lot of authorities are required to submit information to the income tax department under Rule 114A read with section 285B of the Income Tax Act, who are all required to submit the information to the income tax department so that the department will incorporate the details in 26 AS. Before filling the income tax returns, as I told you by the assessee, to understand the tax paid for the relevant financial year relating to the assessment year. That is the importance of 26 AS. I am repeating again and again of the importance of 26 years. Information on the tax paid in the form of TDS and TCS is available in the statement. Tax paid in the form of advance tax, self-assessment tax paid by the assessee is also reflected in the 26 year statement. Very important document for filing the income tax return. Without 26 years, income tax returns cannot be filed at all. So it makes returning filing easy. If all the details contained in 26 AS is used in income tax return filing, there will not be any problem at all for the purpose of completing the assessment. It is an evidence to the authorities having paid the taxes and the other transactions are incorporated in the income tax returns. What is the help that 26 AS will provide to the taxpayer? Makes the income tax department to correlate the data before processing the income tax returns. I have been telling you. When an income tax returns is filed, in case of an individual, they will check on a random, but in case of problems or some of the transactions are not disclosed in income tax returns, the authorities will go through the 26 AS for any serious transactions that affect the tax avoidance or tax loss or loss of revenue to the government. The department will make use of this 26 AS and proceedings will be further initiated against the taxpayer. Then helps to check the TDS certificates as a final proof. Not that TDS tax deduction at source is made or TCS is made. All the deductor and collector is required to issue proper certificates and correctly depending upon the type of transactions. So tax paid by the deductor, the government treasury is also informed to the taxpayer. So another very, very important, in the country now, all the transactions are digitalized. Digitalized system of tax compliance automatically comes into existence by way of all these information which is contained in this document. Very, very important. The tax evaders, they are trying to evade the tax by suppressing the information, making a false documents, false accounting. All those will be now checked by this document. If anybody tries to evade by dubious methods of avoiding the tax, that will be checked automatically with the help of new 26 AS. The taxpayer may miss out some incomes also, for example, interest from bank deposits, financial institutions. Suppose if already bank has paid and if the taxpayer is missed out these transactions in income tax returns, automatically 26 AS will show what are all the interest paid by the banks and financial institutions so that the same income is to be considered in order to file the income tax returns by the taxpayer. TDS made by the banks or financial institutions will be reflected in 26 years, which is much required in order to file the income tax returns. What now I am going to one by one the details of the Form 26 AS. What are all these things? How, etc. Part A now contains TDS details with respect to tax deducted from the income earned or received by the taxpayer. A taxpayer during his transactions, he may be a business, he may be a professional, or whatever the reasons. If a taxpayer earns the income, it will be automatically reflected by way of a TDS under sections 192 is a salary, but there are other transactions 193 to 195. All the transactions will appear in this form, wherever the tax has been deducted. Next. Different types of income on which the TDS deducted is also disclosed here, because I will go through the sections afterwards. Different types of incomes received by the taxpayer will also be disclosed in 26 AS with the corresponding section provisions also in 26 AS. So, what is the income? Is it a income from house property, rental received, or a sale of a property, or a buying a property? All those things. If it is a salary or professional income, how much he has received, what is the TDS made, etc. will be there in the part A. Then there are subsections under which TDS has been booked and deducted. There are so many subsections under which the government will understand and disclose all those things. So, example, a taxpayer on interest income and salary income, then part A Form 26A will be segregated into different sections. Section, for example, 192, it shows what are all the TDS deducted on the payment of salary. 194A for TDS on interest. Like that, all the sections are reflected in 26 AS, and accordingly, the taxpayer is able to disclose the income under different heads of income. Salary, income from house property, business income, capital gains, etc. And then income from other sources. All the 5 heads of incomes have as different sections under which TDS has been made. Now, what are all the sections that can be disclosed in 26 AS? This is only just an overview. As a person who is required to file the income tax returns, he has to have a basic knowledge of the TDS provisions under which tax has been deducted by the payer, that the deductor, and how it is to be. If there is a mistake by the deductor, the taxpayer may have some problems for disclosing the particular type of income. Section 192 is a salary, all salary paid, and it should be under this section 192 only. Next is 192A, TDS on PF withdrawal. You know, the last 2 years back, 2016 onwards, if an amount is withdrawn from the Provident Fund account to the extent of more than 1 lakh, and this will attract TDS at the rate of 10%. The Provident Fund authorities will deduct tax if this is known as a premature withdrawal of the Provident Fund by the employees. If a Provident is withdrawn at the time of retirement, there will not be any problem at all. But if a PF is withdrawn prematurely, more than a certain amount of rupees, the PF authorities will deduct tax at the rate of 10%, which is required to be disclosed in the income tax returns. Section 193, interest on securities. Interest on securities, 193, 193A, so many sections are there. I am not going into the details. There are different types of interest that the person is going to receive. One is a bank interest, bank deposits, then financial institutions where there is a fixed deposits is made in the NBFCs, non-banking financial institution companies, etc. All those things covers under section 193. Even the post office, investment in post office, etc. Government securities, private securities, bonds, debentures on which interest paid comes under section 193. Then nowadays the company is paying dividends on equity shares. Now this is a new section, I will tell you. Earlier 26 years was not there when a dividend is paid. Earlier the dividend was exempted last year. Now from next year 2021 onwards, the dividend on which the taxpayer is required to pay the tax. Earlier it was exempted, only company used to pay tax on behalf of the shareholders. Now this is changed. As a result of that, dividend paid to with a PAN number, it will be indicated in 26 years. Next, 194A interest other than interest on securities, some other interest, private fixed deposits, etc. will be there. 194 winning from lottery or crossword puzzle. You know, whenever a winnings or crossword puzzles, etc., a straight TDS of 30% is payable to the taxpayer, and this will be disclosed in that. Without TDS, even in case of a winnings, it can be lottery, it can be any contest, prize winners, whatever may be that, it will be indicated in the 10 to 6 years. Taxpayer, irrespective of the income, is required to pay the tax at 30%. It will be deducted. It will show under section 194B. 194BB, resources. Person who gets money by winning the racers, TDS at 30% is deducted, and it will be shown here also. Payments to contractors and subcontractors, 1%, 2%, whenever a contract, all the types of contractors, this is relating to business activity. Anybody who executes the contracts to any company, subject to some ceiling, 30,000 rupees is there. Anybody gets more than 30,000 rupees, the payer is required to deduct tax at the rate of, if it is an individual or HUF, tax deduction is at 1%. If it is a relating to the payment to the company, tax deduction at 2%. Then lot of insurance agents are there. They get commission from the insurance company. They have to pay tax on that. The deduction will be made at the rate of 5%. In fact, earlier it was 10% on the insurance commission. Now it has been reduced to 5% on the insurance commission. It will be shown under that. These are all things everybody, I don't say that you have to know that, but a person who has engaged in all these activities is required to know correctly under these sections, and he will be able to disclose the income under different types of. Next, 194DA, payment in respect of LIC policy. Now earlier, whatever the money on a maturity of the LIC policy is received by, it is completely exempted. But it will be shown in 26 years as to where is the source of income. If a person gets on a maturity LIC money, and he will have to later on earn interest on that, that is helps for the income tax department to unearth if a person fails to disclose the interest on the insurance policy maturity amount received. So this is very, very important. Then sportsman or sports association. Whenever a non-resident comes to India for playing the sports, then irrespective of any threshold limit, so far as the sports people are concerned, 20% tax will be deducted on the payment made to all the sports people. Or sports association also, it may be. Because sports association, they will sponsor some of the events in India. Sports people, other countries, sportsmen from other countries, when they come to India for playing any type of sports, when they get money, immediately 20% tax has to be cut and shown under this section. Then National Savings Certificate of the Post Office. When NSSC matures, the tax is required to be deducted. Earlier there was no provision like that. Now even the post offices, subject to a ceiling 2,500 or 5,000, if a person gets the maturity NSC, National Savings Scheme, then tax is required to be deducted. Repurchase of mutual fund or unit trust of India. Normally, what will happen? These units, when it is acquired by the investor, it will be purchased back by the companies. So as a result of that, repurchase of units 194F, it will show when TDS will be affected. Commission 194G, sale of lottery tickets. Commission on brokerage, general brokerage, when a person does earn some income in the form of brokers, age, during the course of buying and selling for a principal, this brokerage will be shown under this section 194H. Then these are all the two things: rent on hiring of a plant and machinery and the rent other than plant and machinery. These two things have been introduced newly so far as rent on plant and machinery, etc. IA and immovable property. You know, under income tax provisions, when a property is sold and if the value is more than 50 lakhs, the buyer, when he pays money to the seller, if the value under Stamp Duty Act is more than 50 lakhs, they are required to deduct TDS at the rate of 1% under their section 194 IA, and this is to be disclosed in 26 EIS. What will happen? The seller who gets money, it will be shown both in the hands of seller as well as the buyer. So the buyer, he will pay the money and the seller is required to deduct and calculate the capital gain on the receipt of property money, and on that it will help for him to disclose the capital gain under section 45 of the Income Tax Act. Then individuals HUF, when they hire the property, earlier this was not there. Now even an individual or HUF receiving rent, and if the rent is more than 50,000 in a year, the person, the tenant is required to deduct tax in the name of the owner, and that will be paid to the government and it will be disclosed in TDS column of the 26 EAS. Then 194J, fees for professional or technical services. All the professionals, chartered accountant, cost accountant, company secretary, engineers, technical, interior decorator, all those technical services comes under this 10% TDS is required to be made on all the payments. This 194K is a new one. Whenever assessee in respect of units of a specified mutual fund is purchased, TDS will be there. Then Unit Trust of India, now payments of compensation and acquisition of certain movable property. What will happen when a government acquires some property? They will pay the compensation. And if the compensation exceeds a certain limit, the TDS is required to be made by the authorities, the government, normally when a immovable property is acquired. Income by way of interest on infrastructure debt fund. Interest income by way of interest from specified company payable to a non-resident. If a company makes some amount to a non-resident, it will also be disclosed in 26 EAS. Units of a business trust, investment fund, securitization trust, SEBI, for example, TDS on interest on bonds, government securities, payments to certain amounts in cash. There are a lot of people pay the cash, and even on that TDS is applicable here. These are all new sections which are going to be there in 26 EAS earlier, which was not there. Other than some payable to a non-resident comes under section 195. Then all these things 195 onwards, it is all payments to non-resident. Non-resident, he may have, but you have to pay the tax. But it will also appear in 26 EAS. If a non-resident earns income in India, subject to some condition, he may also have to file the income tax returns. So 26 EAS will help him to disclose the income to the government for the purpose of payment of tax. Offshore fund, foreign currency, bonds, shares of these are all comes under FEMA Act. Then institutional investor, normally FII, foreign institutional investors buying shares in the country, they get lot of money. As a result of that, TDS will have to be paid and this will be disclosed in the 26 EAS. Next comes 206. C. Lot of changes have been made in 206 C over the tax collection at source. Collection at source from alcoholic for human being. Whenever a company manufacturing alcoholic liquors, when it is sold to the dealers, on the sale value, 5% tax has to be collected from the manufacturer under 206 CA. Then collection at source from timber. When a forest department sells the timber and action, at the time of selling and collecting the money by the government forest department, tax has to be collected. These are all tax collection is in addition to the TDS. It is just opposite to TDS. In TDS, when a money is given, it will be cut. But in TCS, extra money will be collected in the form of tax at the different rates according to different section. Normally, it starts from 1%, some other goes up to 5% also. Then forest lease, government will get the money on that. They have to collect the tax also. Any other forest product, tendu leaves, for example, a bead wrapper, when it is sold by the forest department, because tendu leaves cannot be grown without a license, and then forest department will produce and sell it to the bead manufacturers. When they collect and sell it, the tax will be collected on that. Then when a company, any manufacturing company sells a scrap, 1% tax has to be collected. Then contractors, leasing, parking lot, then all those things. Toll plaza, for example, whoever collects money in the toll, they are to collect the tax from that. Then other sources, contractors, lease rating, etc., will be under toll. These are all the details. Then collection at source from contractors or licensing relating to mine. Whenever a government gives a mine under license, then the government collects money from the miners and they have to collect the tax extra in the form of TCS. Then tendu leaves, sale of certain minerals, bullion and jewelry. Whenever a jeweler sells the jewelry, both bullion as well as jewelry, the tax is required to be collected. There is a ceiling, however, the amount of that bullion is 2.5 lakhs. Is there anybody buying a gold coin or a silver, etc., on that the seller is required to collect the extra tax. Even a jewelry, when it is sold to anybody, he has to collect the tax extra. Then sale of a motor vehicle, cash, anything other than that, you have to collect the tax by the seller. Lastly, from last year, introduce sale of goods for more than 50 lakhs from 110/2010 this year. All the sellers is required to collect the tax from the buyers whenever the sale exceeds 50 lakhs. Applicable for the current year 2020-21 relating to the assessment year 21-22. Then non-deduction, what will happen? Part A1, it is there in the 26 EAS. It will show you also 26 EAS also. This part contains the details of the income on which TDS is not deducted as a result of the submission of Form 15G or 15H. Normally, what will happen? The persons who deposit money in the bank, they submit the forms. 15G for the persons who are below the age of 60 years and 15H for the purpose of senior citizens. The bank deduct tax at the rate of 10% on the interest paid on deposits. But the people do not have any other income. And if the total income is less than 2.5 lakhs or 3 lakhs in case of a senior citizen, they have a provision to file Form 15G or 15H not to deduct the tax. So what will happen? The income tax department, these forms will be submitted to the income tax department by the banks. Very, very important. Then what will happen? Then all the banks Like that, if a person tries to submit 15G or 15H when he normally deposits different banks, etc., all the banks are required to submit the information to the income tax department. So automatically what will happen? If a person trying to avoid the tax on the interest earned, even in case the ceiling amount for a senior citizen exceeds 3 lakhs, he is required to file the income tax returns. So if a by mistake or purposely files the 15G or 15H, the banks will submit these forms to the income tax department, and based on PAN number, it is possible for the income tax department to plug the non-disclosure of interest and non-disclosure of interest income and also tax liability A1. This is going to be included in the 26 AS. When any form 26 AS, 15G is considered as the evidence which will lead to no TDS on income received by the taxpayer. So automatically they can come out with a notice to the taxpayer, submits this, then the bank shall not deduct under section 195, but the information will be sent to the department. So entries appearing here in a result of TDS return filed by the tax deductor. Hence, there is a TDS mismatch between TDS certificate and Form 26 AS, or no TDS due to non-filing or wrong filing of TDS returns. Then the tax deductor will have to revise and rectify the TDS return and render appropriate tax credit. There may be some mistakes by the tax deductor, mismatch between the TDS, etc., and all those things. That is to be, there is a provision to correct the quarterly returns of TDS and TCS. It can also be corrected, which will also be incorporated in 26 AS. Next is part 2A, part A2. Applicable to the seller of a land or property pay. Then resident contractors, professionals. This part is specially dedicated to TDS and sale of immovable property under section 194 IA. I have already explained, their information will be there for both the buyer and the seller. This Form 26 requires the buyer to deduct tax and pay the TDS to the government before gets a registration. Suppose if the value is more than 50 lakhs under this section, tax is to be deducted at 1% by the buyer when he makes payment to them. Without TDS certificate issued by the income tax department, the registrar will not be permitted to transact, that is, the register the property when the value especially exceeds 50 lakhs rupees on a immovable property. Next, I'll go to part B on the TCS. Tax collected based on PAN of the taxpayer. TCS is applicable on certain goods like scrap. Already I have explained that also. Again, I am summarizing all those things. Then the seller is required to collect the tax, and this also appears in part B of the 26 AS. So required to collect the tax, and it will be filed. Quarterly returns will be filed by the tax deductor. Automatically, it reflects in part B of the 26 AS. Then there is a provision to pay the advance tax by the taxpayer. Non-corporates, they are required to pay the tax in advance when there is an income in the financial year. He is required to assess what is the total income that may be earned by the person, especially in the case of a business or profession. He has to find out what is the tax liability, and that is required to be paid in advance in the financial year. For non-corporates, HUF, individual HUF and partnership firm and others are the association of persons, body of individuals, they are required to pay the advance tax in 3 installments starting from September onwards. September, December and March. For the corporate addresses, the whole business is required to be computed in advance. Income is to be estimated, profit is required to be estimated, and start paying the tax in advance starting from June. 4 installments for June, September, December, and then March. On 15th March, all the taxpayers, whenever there is an income earned, they are required to pay the entire 100% tax. Then afterwards, the income tax returns will be filed. This will be disclosed in Part C of the 26 EAS form. So, based on this, if there is a shortage, the tax is required to be paid before filing the income tax returns by the different categories of the taxpayers. Show the details through which the tax paid by the taxpayer. There will be a challenge, breakup will be there, what is the tax, what is the surcharge, what is the education cess, etc. And the details like the BSR code, when the amount is deposited, challenge serial number, all those things will reflect in the 26 EAS form, return of income in the form of 26 EAS. Then, whenever the income tax assessment is completed, and if there is any extra tax, excess tax paid by the taxpayer, after assessment is over and issue of assessment order, then the government will refund the tax. And there is a provision to pay the interest if there is a delay in refunding the excess tax by the income tax department. There is a provision in income tax to pay the interest, and that will also be indicated in the 26 years. What will happen? One information I want to tell you. On the excess tax refunded by the government makes the payment of interest, and that interest will be treated as an income in the hands of the taxpayer in the current year. Normally, tax is refunded in the financial year, and for that financial year, interest is to be disclosed as the income at the time of filing the income tax returns. So, actually received the refund, and assessing officer will be able to sort out the issue so far as the refund is concerned. Next comes to very, very important information regarding the financial transactions. That is the Part E. So these are new things that is introduced in the 26 EAS. The 26 EAS has been revamped. This is the new 1st June 2020 has been introduced to contain all these transactions. Annual information statement, which is apart from the TDS and TCS details, now contain a comprehensive information relating to specified transactions, payment of taxes, demands, refunds, pending and completed proceedings of the income tax department, undertaken by the taxpayer, filed cases, etc. All the legal proceedings pending will be disclosed in this Part A of the 26A form. So all these things are mentioned in the income tax returns also. These details taken from the 26 AS is required to be incorporated in the income tax returns before filing. Financial information, I will continue that. Information like cash deposit made, withdrawal from savings bank account. You know, nowadays, any amount withdrawn from savings bank account in excess of 50,000, they are required to give a PAN number. Or even if cash is deposited in excess of 50,000, PAN number is required to be incorporated. Without a PAN number, in excess of 50,000, deposit cannot be made. In excess of 50,000, without a PAN number, cannot be withdrawn from savings bank account. Whenever a PAN number is given by the account holder, the same thing will form the financial information that is required to be submitted at the bank to the income tax department. So automatically, the department will know what are all the money deposited or withdrawal in the form of 26. It will appear automatically because of the digitalization. Automatically, all these transactions will appear in the 26 EAS. Purchase of a foreign currency, purchase of shares, debentures, everywhere without a PAN number, no transactions is possible. So all the transactions will be there in 26 AS. All these information are required to be submitted by the persons who are required to submit that. Who are all persons required to submit the information? I will tell you about that later. So institution issuing bonds and registrars, since the financial year all those details are available. Financial transactions continue is under different SFT, Statement of Financial Transactions. SFT means Statement of Financial Transactions will be shown in the new form. This is a new development, new change that has been incorporated by the government in the form of 26 years. The information being received by the department from the filers. There are a lot of filers so far as the SFTs are concerned. Statement of Financial Transactions is now being shown in Part E of Form 26 AS because it makes the taxpayer to voluntary compliance, declaration, accountability, e-filing returns, etc. So the taxpayer will have a very minimum chance to evade or non-disclosure of the particular transactions in the income tax returns. Same can be used by the taxpayer to file the income tax return and correctly calculating the tax liability. This will help the government to avoid the tax or evade the tax. It will also help to increase the tax revenue to the government by making the taxpayer to disclose all the transactions. Then transparency. I have already told you, transparency and accountability is the very important two things in the tax administration that will be there. Okay. Then what are the financial transactions? Statement of Financial Transactions. Part A in the form would show different fields such as what is the type of transactions, name of this Statement of Financial Transaction filer, who has to file, what is the date of transaction, whether it is shown in the single name or a joint name, member of the parties. All the transactions will be disclosed in these details. Mode of payment, how it is paid, what is the reasons, all those things will be shown in Part E. And in honest taxpayers with updated financial transaction while filing their returns. Whereas it will desist from taxpayers who inadvertently conceal the financial transaction. Conceal means they suppress, they don't disclose to avoid the tax. This will be plugged automatically by the help of the 26 years. Also have information of transactions which is due to be received by the financial year. From this information is required to be disclosed in the new 26 years, starting from the 2015 and 16. Earlier it was not there. So annual information statements contains all the details from the financial year 2015 and 16 onwards. The taxpayer has to be very careful while executing the high level or high value financial transaction. All the substance, reasons, proofs is required to be disclosed in the income tax return, which will facilitate by taking the information from the Form 26 AS. I will go to now one by one. What are all the financial transactions that is required to be disclosed? Number one, these are all number contained in the statement. SFT 001, payment made in cash for purchase of bank drafts. Whenever a person takes the bank draft by remitting the cash, this will be disclosed here. And the bank automatically, you have to get the check, that is the PAN number, and these information are required to be submitted by the bank, as the non-compliance on the part of the bank will be a serious offense, I tell you. So, check an amount aggregating to 10 lakh rupees or more in a financial year. That is the SFT, Statement of Financial Transaction 001. Number two, payments made in cash aggregating to 10 lakh rupees or more during the financial year for purchase of prepaid instruments issued by the Reserve Bank of India. Lot of instruments are there by RBI. Whenever they want to buy this for the purpose of various transactions, then this information will be required to be disclosed. Cash deposit aggregating to more than 50 lakhs rupees or more in a financial year. If anybody deposits more than 50 lakhs in the financial year, the information is required to be submitted and by the concerned bank and which will appear in this 26 AS under this code. Number 1, cash withdrawals including through bearer check also. Even if a self-bearer check, if it is declared and withdrawn from the account payer itself, account payer, that is the account holder, the information is required to be disclosed also. Then SFT 004, cash deposits aggregating to more than 10 lakhs rupees or in a financial year for one more account, transfer from one account to another account. If an amount is transferred for more than 10 lakhs, that will appear in SFT 004. Here, this is the form. SFT 005, one or more deposits other than the time deposit made through renewal of another time deposit. Suppose time deposit will be there, it will be withdrawn again, renewed also. That will not come, but if a new deposit is made and aggregating to more than 10 lakhs, it will be disclosed here. Payments made by a person an amount aggregating to 1 lakh rupees or more in cash. More than 1 lakh, cash payment is not allowed at all. It will be only through account, banking channel only. More than 10 lakh rupees against the bills raised in respect of credit cards issued to that person in a financial year. Suppose, for example, a person uses the credit card, and if the transactions are made and if it exceeds more than 10 lakhs, the information will be disclosed in SFT 006. And in ITR, suppose that person makes a purchase of more than 10 lakhs, and if he does not disclose where he gets the money, there will be a source of income. That source of income is required to be disclosed in ITR. Suppose if he fails to disclose all those things in spite of buying lot of things against the credit card, then it shows that he is suppressing the income or evading or try to not to disclose the income at all. These are all benefits from the point of view of government revenue so far the tax collection is concerned. Receipt from a person amount is aggregating more than 10 lakh rupees or more in a financial year, acquiring bonds and debentures issued by the company. Any company issues bonds and debentures, and if it is more than 10 lakhs, the information will be disclosed in 26 EIS. Renewal account of bond and debentures issued by the company. Suppose if there is a renewal, there is no problem, but a new investment will be there. Then receipt from any person an amount aggregating to 10 lakhs or more in a financial year for the acquisition of the shares of a company. So this is a new information in 26 EIS. Buyback of shares. When a company buy back shares from the shareholders, then that information will be available in 26 EIS. How much money has been paid by the company for buying the shares, that will be disclosed in 26 EIS. Then 10, amount aggregating to 10 lakhs or more so far as acquiring units of more than schemes of a mutual fund. Whenever a mutual fund sells or purchases and the money is invested, exactly will be shown in 26 years. I will also show you how the transactions appear in the mutual fund of a TDS form. Then 11, receipt from any person for sale of a foreign currency. If a foreign currency is purchased for the tour abroad or whatever it is there, and if the amount is more than 10 lakhs, traveler's checks is purchased from the authorized dealers of the Reserve Bank of India, that information will be disclosed in this section. Then immovable property of a 30 lakhs or more transactions is required to be disclosed in the income tax returns. More than if the value of the property is more than 30 lakhs, it is required to be disclosed in the income tax returns. The same is available in 26 years also. Receipt of cash payment exceeding to 2 lakhs for sale by a person of goods and services in the nature of other than. Whenever this is a GST compliance. So what will happen? When a person sells the goods and the amount is more than 2 lakhs, the information is required to be shown in 26 years. Cash deposits on or, because this is regarding demonetization period. I will tell you. In 2016, that is 9th November to 30th December, lot of people have deposited the demonetized currency. All those information, even now people are going to submit and deposit also. Then with the permission of the Reserve Bank of India, then all these information is required to be available in 26 AS. Current account 2,50,000 rupees or more. In other accounts, cash deposits, that is date also given. All those information is available here. Then who are required to furnish the information that is so far as the specified financial transactions? The information is required to be furnished by the assessee himself, government office, local authority like the corporations, village panchayat, district panchayat, or a public body or any other association. Registrars, sub-registrars, this is required for the purpose of collecting the tax and deducting the tax at the time of sale and buying of the immovable property. Registrars are required to submit the information to the income tax department. Registration of the motor vehicle authority. Whenever a person buys the motor vehicle for the value is more than 10 lakhs, there is a tax collection at source provision is there. Anybody buys a motor vehicle for more than 10 lakhs, tax will have to be paid, collected by the seller of the motor dealer, that is the dealer of the motor vehicles. So RTO will have to give the information who have all purchased the motor vehicles, and if the motor vehicles is more than 10 lakhs. Post office, when a money is collected or paid by the post office, information has to be given. All these persons are responsible for submitting the financial information to the income tax department. It is an obligation under the law. Reserve Bank also has to give the information to the income tax department. A depository, national NSDL, for example, National Security Depositor Limited, information is to given. Or sometimes the CBDT, Central Board of Direct Taxes, will give a notice or a circular who are all any other person who are required to give the information to the income tax department. Portable persons for who are the reportable persons for the specified financial transactions? A bank, including a cooperative bank, post office, postmaster, a Nidhi company, mutual funds is a Nidhi company, NBFCs, non-banking financial companies, credit card issuing companies, credit cards issuing companies and banks, a company where the goods are going to be sold, mutual funds, authorized person for the foreign exchange FEMA rules, then registrar or sub-registrar or any other person. Now I will come to what are all the information that the bank is required to give to the income tax department on the transactions. Payment made in cash for purchase of bank draft. These are already I have discussed. This is only summary of the things I am giving, which are all the information a bank is giving to the income tax department. Cash more than 10 lakhs. Then cash deposits, cash withdrawals in the current account as well as. Then cash deposits, time deposits more than 10 lakhs or 1 lakh or more in cash. Then 10 lakhs or more by other modes, credit cards, etc. These are information the bank is required to submit to the income tax department. What is the post office or postmaster has to give the information? Cash deposited in a post office savings bank account for more than 10 lakhs or more in a financial year. Then time deposits for more than 10 lakhs in a financial year. The postmaster will submit information to the income tax department. Nidhi company, normally NBFCs, time deposits, bonds, debentures, acquiring shares, buyback of shares, then all other details are required to be submitted, listed in a stock exchange, etc. Then cash payment exceeding more than 2 lakhs for goods and services is required to be disclosed here, submitted by the NBFCs. Company, debentures, acquiring shares, buyback of shares, issue of shares, cash payment exceeding 2 lakhs, then cash payment exceeding 2 lakhs for goods and services under GST. This information company is required to submit all those things. Then mutual funds, receipt from any person of an amount aggregating to 10 lakhs or more in a financial year for acquiring the units of more than under mutual fund scheme. Authorized person under foreign exchange management, FEMA, sale of a foreign currency. These are all mutual funds. RBI has to give this information. More than 10 lakhs in a financial year about this. Registrar or sub-registrar for the sale and purchase of immovable property, more than 10 lakhs, 30 lakhs, sorry. Any persons liable for section 44AB tax audit. A tax auditor is required to disclose all those things, and then this information is available and submitted to the income tax department. Part F, details of deducted on immovable property, 194IA, TDS on rent of the property, then TDS on payment to resident contractors and professionals. This is relating to buyer of the property or tenant of the property. When a tenant makes payment to the owner, when the total amount exceeds 50,000, tax is to be deducted by the tenant even if it's an individual. So applicable to contractors and residentials. TDS defaults, processing statements. Details to be reported in 26 years or short deduction, interest on TDS, payment defaults, interest on TDS, deduction, non-deduction, late filing by section 234E, because some of the people who are deducting tax, they may file the quarterly returns late. What is the late file fees? Everything will be disclosed in 26 years. What is the other default? Interest under section 220E. How to access 26 AS? I log into the income tax e-filing website, go to my account, click view 26 AS credit. It will be directed to Traces. Traces is a organization where we can download all the TDS certificate and TCS certificates. Click the assessment here. This forum will open. Now, what is the steps for filing? Login. Income Tax India e-filing. This is the website. This is already told you. Confirm, and then TDS portal. It will go to NSDL. Click here to credit and download, etc. See the format under 226 AS, new format that appears in the 26 AS under the new forum. Annual information statement, financial year, assessment year, Aadhaar number, PAN number, name, date of birth, mobile number, email address, then address. What is the information relating to TDS, financial transactions, relating to payment of taxes, demands and refund, pending proceeding. This is a summary of all those things in 26 AS that will appear under 26 AS. So these are all the new changes that the government of India has made in 26 AS. How the information is going to 26 AS from different parts. When a quarterly returns are filed by the deductor and TDS, information will follow the income tax department. The income tax department and payment of advance tax, income tax department, when advance tax is received, the department will give the information. Quarterly returns filed by the TDS and collector of tax. For example, filing of the quarterly returns form 24Q, the information will appear in TDS 26 AS. 26 AS is regarding to TDS made on other than salaries. The information is available in this forum through NSDL traces. 27Q is regarding the statement of tax deduction on income, interest, etc. Then this is tax collection at source, 27EQ. What are these certificates? Based on all this information, 26 AS, they have to download the certificates. It is for the taxpayer to download the certificates here. Cross-check 26 AS certificate issued by the deductor. All the deductors and collectors will issue certificates, and then it is to be checked with the 26 EAS before filing the income tax returns. Form number 6 are for salaries, 16B for TDS under section rent, then 16A for TDS and other payments. This is for TCS 20. These are all tax deduction certificates which will appear in 26 EAS before filing. This is to be checked. 16C is the TDS certificate issued by the deductor, tenant of property. This is a new provision. Landlord of the property in respect of the tax deducted and deposited as TDS on rent. So these are all the flow of information. Now I will go to and just show you that also. I will show you just the 26 AS also. Just for your information, I just open and show the 26 AS form here. 26. This is the 26 AN form for information. Traces. TDS reconciliation analysis and correction enabling system. Annual tax statement under 203A of this season. Then name, PAN number, financial year, transactions, address, everything will be there. Then these are all the TDS, part A of TDS, and then tax deducted 15H, 15H and all those things. If a person who has deposited money in a bank, this will be disclosed here. Whatever tax is not deducted, this is tax not deducted because submission of the forms. Then these are all on TDS made by different transactions, resident contractors, section 194, etc. Then tax collected, tax collection. Then TDS, for example, if you see that here, TDS has been made here under that, whatever the refund, details of tax paid other than refund. There is a, you can see that education says 1,25,000 plus education paid in advance. This will be shown here. Then other things I'll just glance through that. SFT transaction, statement of financial transactions. Amount shown in SFT, whatever it is there, details of the buyer of the property, then there will be aggregate seller of the property, everything will be there. For example, I will show you here if there is any default, etc. All those details are available here. These are all different sections. Everything is available and the information. This is what you are going to get there. For example, here I will show you a person has sold the property. For example, I will show you here. See here. This person has sold the property, received 62,50,000 and the buyer has deducted tax. This is according to that section, it will appear. Now what will happen? By this, the person has received this money and it attracts capital gain under the income tax provisions. If he fails to disclose the capital gain and pay the tax, 62,500 is only 1%. The capital gain attracts 20% on that. Suppose if he fails to disclose all those things, based on this information, the income tax department will issue notifications to the taxpayer. So what will happen? Amount received minus all the cost, etc. Then they have to calculate the capital gain paid yearly on these transactions. About 2 lakhs rupees tax comes and all those things. Already 62,500 deducted. The remaining amount is required to be paid by the person who has sold this property. This is very, very important. Transparency on the funds of. These are all new 26 year. These are all SFT transactions. I have already told you. This is for the buyer, seller, etc. All those things are there. These are all things. This will be symbols also in 26 years. That means if a taxpayer deductor had made some mistakes, it will show as unmatched. Then if he files that final, etc., overbooking, these are all errors that will show in 26 years, which is required to be corrected by the taxpayer. Name, etc. These are all reasons. Rectification, etc. They will be there, etc. and all those things. Okay. Note form 20. These are all details. Explanation for various transactions will be there here itself. Okay. And different sections for TDS list is there. All those things which I have explained. it is available in the 20. These are all SFT transactions. Different 1 to 14. I have already explained this in my discussion. So these are all available. Anybody can go and download that and read that explanation. This is a glossary. AI Annual Information System, Assessment Year, Education State, SFT means Statement of Financial Transaction, TDS, TCS, GST, Goods and Service Tax Identification Number, all those details are available here. Okay. So with this, I think I have made an elaborate discussion on the new 26 CAS. I hope I have made it clear on all the provisions that contain in 26 CAS. Thank you very much for having listened to my discussion on the 26 CAS. Thank you, my institute, for having given this opportunity to share my knowledge on the income tax provisions with regard to 26 CAS. Thank you very much once again. I am going to share my PPT, which will be available in the institute. The participants can take this PPT for their study. Thank you very much.